For decades, silver was seen as gold's less glamorous sibling, trailing behind in value and attention. But today, May 13, 2026, silver has shattered expectations, breaking through $86 per ounce and holding strong, a level that stunned analysts. This isn't a fleeting spike. It's a fundamental shift in how the world values silver. Silver is now a strategic asset, as vital as oil or rare earths, thanks to soaring industrial demand and tightening supply. Its unique properties, superior conductivity, reflectivity, and antimicrobial qualities, make it irreplaceable in high-tech and green energy applications. Unlike gold, silver is consumed, not hoarded, tying its value directly to technological progress. Governments are now treating silver as a matter of national security, moving beyond simple trading to strategic stockpiling. Nations are scrambling to secure access, recognizing that without silver, technological advancement stalls. The days of silver as a secondary asset are over. Its new era as an industrial and strategic powerhouse has begun. The world is waking up to silver's essential role in the global economy. Silver's price surge is driven by relentless industrial demand, especially from the green energy revolution. Every solar panel and electric vehicle relies on silver for efficient energy transfer and circuitry. As clean energy expands, so does silver consumption. Unlike gold, silver is used up and rarely recycled from electronics or solar panels. Smartphones, laptops, and data centers all depend on silver's unmatched conductivity. The rise of AI, IoT, and 5G only intensifies this demand, straining an already tight supply chain. Millions of ounces are lost each year in products destined for landfills, creating a structural deficit. Silver's industrial uses keep expanding: water purification, medical devices, antimicrobial coatings. Each new innovation adds to demand. This isn't a passing trend, it's a permanent feature of our high-tech world. The global economy now rests on a foundation that requires ever more silver, driving its dramatic price revaluation. Just as demand peaks, a crisis erupts in Peru, one of the world's top silver producers. An energy emergency threatens mining operations, especially for small and mid-sized mines responsible for 75% of Peru's output. Peru holds the largest silver reserves and is the second largest producer globally. Any disruption here shakes the entire market. Blackouts and fuel shortages could slash production, deepening the global supply deficit. With demand already outpacing supply, a drop from Peru would intensify competition and drive prices even higher. The crisis highlights how fragile the silver supply chain is. Regional turmoil can trigger global shockwaves. As Peru struggles, the world faces the real risk of a major silver shortage. This supply shock cements silver's new price territory above $86. While Peru's supply falters, China is quietly stockpiling silver, tightening the market further. China's manufacturing dominance depends on silver for solar, batteries, and electronics, but it must import half its raw silver, much from Peru. Fearing supply disruptions, China is building massive reserves, treating silver as a strategic resource like oil or rare earths. Shanghai Futures Exchange inventories are rising, but much more is likely hidden in state and private vaults. This hoarding removes silver from the global market, reducing availability for others and setting a floor for demand. China's actions intensify global competition, pushing prices higher and reshaping the balance of power. The world is now racing to secure physical silver, but China has a significant head start. Strategic stockpiling is a powerful force behind silver's new era. As silver's price climbs, a critical gap is emerging between paper silver, like futures and ETFs, and actual physical silver. For years, paper markets traded far more silver than physically exists, but now, more investors want real metal, not just paper promises. Registered silver in exchange vaults is at historic lows, raising fears there's not enough to meet delivery demands. Coin shops and bullion dealers report soaring premiums and delivery delays, signaling a severe physical shortage. If many paper holders demand delivery at once, it could trigger a dramatic price spike as paper and physical prices converge. The disconnect is clear. Paper markets suggest one price, but the physical market tells a story of scarcity. Investors are choosing the security of physical silver, draining available supply. This trend could lead to even more volatility and higher prices ahead. The rush for real silver is exposing the system's fragility. Silver holding above $86 isn't just a record, it's a repricing based on new realities. Unprecedented industrial demand, fragile supply chains, and strategic stockpiling have permanently changed the market. Silver's value now reflects its indispensable role in 21st century technology, not just its relationship to gold. Analysts believe $100 silver is no longer far-fetched as structural deficits widen. If the physical market tightens further, a rapid price surge could follow. Silver is shifting from a precious metal to a finite strategic resource. Volatility remains, but the fundamentals, soaring demand and shrinking supply, are here to stay. The debate is no longer if silver's role has changed, but how much its value will rise. Silver is now a cornerstone of modern civilization, essential for technology and national security. Its future is inextricably linked to the world's technological progress, and its value will continue to tell that story.